Hey, Mark the Meerkat here for D7 with the Grok Trade weekend review of the markets. That's right, D7's in transition down there to Tampa, Florida to set up his hedge fund. And his computer is still packed away, so he's asked me to do a real quick review here of the broad market. So let's get right to it. Hey, how did the markets close on Friday? It's here all up about point zero 0.12 to plus 0.42, and then bank was up 0.8. Now bank started to report here last week here as the earnings parade for the first quarter now began. So some of the two big to jail banks have reported they would knock out earnings, but guess what? The bank index didn't move that much. And then that VIX closed way down at 16.25, and we'll look at that chart. Of course, the news of the week was Coin. Coin took off, and we'll take a look at that, what happened to that IPO. So here we are. Let's take a look here at the S&P 500 weekly chart here, starting off. And again, we were concerned here. It just broke out from the upper resistance line here. Des talked about it last week, and boom, it went up new all-time highs on the S&P 500. DIA also broke out new all-time highs on the Dow Jones Industrial Average here. Nasdaq is pulled back, and on the weekly chart it's now up here to this resistance line. It stalled just under it last week, and as was concerned, well, it's right at it again this week, but new all-time highs on the weekly chart. And then the Nasdaq here has not been up here at its highs. It had its highs way back here in early March, and has been pulling back here and just kind of fluttering around here after a huge run up since September. And then we have our friends Bank here again. Bank, this is the weekly chart now. This is the weekly chart on Bank. We had all the major banks reported this week, and not much of a move there. So it's still in a pullback off its all-time highs up here back in early March as well. So here, this is the weekly chart on the VIX, just to give you a perspective of what's been happening on that VIX. Back when COVID hit here in early 2000, we were down here and we were complacent around 15 to 14, 13 for a long time, almost the whole year. Never really broke above 20 all year long in 2019, and then kaboom, up here in the 80s. Then we were hanging down here. This is weekly now. We were sitting here in the 40s for a long time, and then we hung around between 25 and 22 for the longest time. Finally, here in the last 4 weeks, we are now settling down below 20, which traditionally was, if you were above 20, we were screaming as far as fear in the markets. But now we're finally drifting down here. We close at 16.25, but doesn't mean that we're going to stay complacent here. There's still a lot of uncertainty in the markets regarding the recovery from the COVID pandemic, and yet people are starting to get used to it as the vaccine comes out. But keep an eye on that. So for those who just started to trade during COVID, this has been a wild time. They've never seen the VIX below 20 here. And so has it been a difficult time? Yes, especially for swing trading. And intraday trading has been very good, but it's been really choppy here in the last month or two. Intraday been very choppy. So let's go ahead and go to the daily charts here and start to analyze those a little bit, and then we'll take a look at a couple of different charts here. So here's the S&P 500. Again, we were on this rising wedge here, and then 2 weeks ago, well, on the Friday here, we popped up above it, and now it stayed above it, and now it's just drifting up here, drifting up, new all-time highs, and on a doji day Friday, but it was up 0.33% on the S&P 500 on Friday. Now, the biggest concern here is look at the volume. Look at volume. Very low volume. There's the 20 moving average on volume. It's very low volume here, except for Friday. Now, Friday was expiration day for monthly options, so that might have been a part of it for the increased volume. But look at it, very low volume as we're going to new highs. So that's just kind of like a little bit of danger in the distance on that indicator. A second indicator, this MACD, the way that we use the MACD here at Grok Trade. Look at this here. We're getting new highs here. Well, we are getting we did not get a new high up there. So look at that, it's going up too. So this is saying, hey, the trend may continue here. So we're getting some mixed signals here as we're kind of dabbling here in new highs. It's not thrusting higher like it was earlier, but they're getting higher. Dow Jones Industrial Average is very similar, up here to new all-time highs. This is not a new high yet, but we do have a high here, and right here we do have it going higher there. The Nasdaq, now it did pull back rather significantly here, and it was in that symmetrical triangle, and it broke out here starting on April 1st. It wrote back up after the huge run up. I mean, it was running up so much more than the other markets. Now it's back up here at all-time highs, but it is just floating around up here near its highs. Look at that. This week, 4 days, it was just kind of high basing here. So again, it was just up 0.12 on Friday, not much at all. And that MACD, though, again, it is getting higher here, so the trend may continue after this big pullback here. The small cap Russell's been struggling a little bit more after its nice run up here. Since March here, it has just been fluttering around here. It hit its all-time highs here around March 15th, and now it's on the daily chart, and it was in a symmetrical triangle, but just kind of, yeah, just barely pops out. And again, it's just basing here on low volume. Well, that's pretty typical. It means that something could be in the works to either pop up strongly or drop strongly there. That's the small cap Russell. Bank, same thing. It ran up here. Its all-time highs was here at on March the 12th, and then it's just been low basing here. And again, the banks started to do their quarterly reports on earnings. Didn't really move that market much at all. Now, this is the bank index, which is 720. Beat regional as well as the big banks as well. So that's a big. And again, the VIX here back down here and floating down. Now, last week, Des did talk about that warning about some analysts say that we may jump back up here in that 25 range, around that 200 moving average. Anything is possible, folks. So just be aware and be set. Trade your plan and plan your trades. Now then, let's talk about coin here. It did open up, and it did open up 31% higher than it was offered. It was like at 200 and something was the offering price there. And then, it opened up here at the top of the day, and then it proceeded to fall. So for there was a few students that got in this early. We said, it was a big warning with Romulus out on our new platform, and it did not heed warning. He ended up losing a bunch, as he said, I'm in it, and it's up so much, by the time he got in. But it did bounce a little bit here, back up about 5% on Friday. Now, here is classic buy on the rumor, sell on the news. So let's look at Bitcoin. Look at Bitcoin running up and up. Hit over, it was up here, was the high on this day. The high was 64,895. And then the Bitcoin or Coinbase, well, look at that, kabam! It was down over 10. Right now, it's down 11% today. This is active. This is an active candle on a Sunday morning when I'm doing this. It's down 11% right now on an active candle. So this does take 24 hours, 7 days a week. So look at that, bam. This is called sell on the news. Here we go. Ethereum, look at that, same thing. This is an active candle right now. It's down 11% today too, and it was down even more here, just pulling back up. This is an active candle. So point is, it right up into the actual IPO, and it's been falling ever since. But that's very typical news on that. So let's wait until this settles out, and then we'll get back in again. So let me run a couple of stocks by you here. Let's get this minimized here a little bit. Netflix has earnings this week. It's coming up here, and Netflix is popped up and has been running around here. This is a possible bullback entry that I had set up for the newsletter a couple months ago, but it has just been floating around here. But it is expected to just blow out earnings here. The expectations for Netflix, which does report here on the 20th, which would be on Tuesday. Intel is also reporting this week, and it's on the 21st. And again, could be a bull pullback here. Now, Google, which Des did a bunch of warnings about last week, and it had black candles on this program there. it's just basing here, just kind of floating up here a little bit on Friday. Tesla did make a bit of a rebound here, back up above $700. You can see it was stuck here right at 700. Look at that, right at $700, even dollar amount. It was stuck there, and it finally broke out there on Tuesday. And then we got Apple, APL. There we go. And now it's, again, it ran up here, nice run up, but now it's just basing up here. It just loves this between 38 and 28 area here. It's been in that range and then dropped below it and now back above it. Not running up as fast as it was over the last year. And then we got Amazon here, back up. It broke out, and Des said watch out on Amazon. It broke up here, and now it's just floating above this resistance line here, support line, from these connecting the swing highs back that way. And that's it for the tech stocks. So very quickly here, you can unmark the Meerkat. I run the day trading chat room. I'm also a mentor for a 301 mentoring program, which I'm actually doing a program this weekend. And what are my views of the markets? Well, I see in the bigger picture here that the stocks are rotating out of those high growth tech stocks over into the more of the value stock area. The S&P and the Dow have been riding up, and then we've got the smaller caps, Russell and the tech stocks have been lagging there I'm talking about over the last 3 months here, after that super run up last year in tech stocks, which personally in my swing account I made a ton of money in there, but it's been struggling trying to trade the tech stocks here after the first of the year. But again, we have high volatility in the market. It's still just getting down below 20. Then it's just starting to settle out here. Let's see how this recovery goes. Job numbers are jumping, and so there's some certainty coming back into the markets, and as people get their vaccinations and we start to get our economy more back to normal. Again, the market's looking out 6 months here. It isn't just looking at today's report only. It's looking out 6 months. So it's starting to look at what could happen in 6 months. That's what its view is. If you go back and look last year, on the day they announced that they may have a vaccine by the end of the year, is the day that the market stopped and ran straight up from there, because they were looking out 6 months that we could start getting back to normal. That was after that huge dive there during March and April. When they announced that we could have a vaccine, it turned out it was true. We did have one by the end of the year. But the market said, okay, if we have one by the end of the year, we could see improvements, and that's why the market went up. Now looking out 6 months, what is the impact going to be of having that vaccination to get the crowd immunity, and again, how it affecting our economy. Plus, we have the geopolitical spectrum of a lot of unknowns now. Is going to be increased taxes. Of course, there's a lot of increased spending proposed here in the U.S., and so let's see how this all rolls out. But until then, trade well, and may your winners run.